All right. Let's do this.
So yeah, so first of all, let's start by back testing first and see how the from Friday up to yesterday and see how the market was. Okay.
Yep.
So on Friday, actually we had a nice setup, but we didn't actually have a setup from the order block. It was from the fair value gap. Okay. So I wanted to show you this first on how the market sometimes respect the fair value gaps, and also so that you may actually on your own time zone you may actually back test and see if what fits you is order blocks or fair value gaps. Okay. So
Right.
you will actually choose between order blocks or fair value gaps depending on your back testing. Okay. So what is from here? Let me play this so that we may actually analyze it nicely. Remember when we were talking about liquidity on the issue of previous day low, previous day high? Remember, right?
Yeah.
Yeah. So somewhere here, I missed an opportunity on Friday because I was actually waiting for the market to mitigate my order block, but instead the market mitigated the fair value gaps and continued to go up. Okay.
Right.
So you see this green dotted line here. Yeah, this is where previous day low is. Okay, because actually I searched for that indicator that you told me, also an FX algo. I didn't find it. Okay, so
Okay.
I actually ended up finding this one, this indicator. Okay, this DWM HL. Okay,
Okay. Got it. Nice.
so this one marks the previous day low, the previous week low and highs, and also the previous month's high and low. Okay, so this green area here, this is the previous day low, and you can see this was Thursday. Okay, see, this was Thursday here, this was Thursday, and where we are right now here, it was still on, this was this Saturday. Yeah, this is previous day. Okay, so this is previous day low, according to actually how I
Yeah.
actually saw this opportunity. Okay, this was the previous day low.
Yeah.
And so price went below this level, and so you can see price took this previous day low. Okay, so if I go on higher time frame, first it's important to check the higher time frame direction bias. Okay, you understand that it's very important to check the higher time frame direction bias before you actually start looking for any opportunity on lower time frames. So the higher time frame, if you look on the higher time frame right now, you see we have this currently we have this bullish candle. Okay, you see this.
Yep.
So we have this bullish candle, and if you look on here on the left here, you see we have this like an orange dotted line here. Okay, you see this. Right
Yeah, I see
here.
it. Yeah.
So this is a previous week low. Okay, so this area marks the previous week low, and this one, the one with I think this is is violet or violet color, which color? This one, the other line here is the previous month's low. Okay,
Right.
so this one here, the orange colored one, is the previous week low. So it means price took the previous week low, and currently price is here with this bullish candle. And if you look on the left, we have this red candle. Okay, this one. Okay,
That's the order block.
yeah, so this is the order block. Okay, so on daily time frame we have this nice reaction on this bullish order block, the daily order block. And then if you look on the daily time frame, you see like price took this previous week low. Is it?
It did. Yes.
Yeah.
Yes.
So if we have this we see price took this previous week low, and again price is here, and we can see we have this bullish candle. So it means it is not like we can now expect to see bullish movements. Okay, because we see prices actually started to create these bullish candles. Okay, so you can just go to this lower time frame here, 15 minutes. Okay, where we actually saw price took the previous day low. Okay, so on daily time frame we see price took the previous week low, but on our 15 minutes we see price took the previous day low. Okay, this one, the green colored one. Okay, this is where we are. Okay, so now what we are supposed to do, just have to wait for the market to show us good opportunities for us to buy. Okay, right now here we see the market is bearish. Okay, the market is moving to the downside, and this movement took this previous day low. Okay, so now we have to wait to see some bullish structures being created by the market, especially if we see the market taking this high. Okay. Okay.
Sorry, can you repeat that one more time?
Okay, so
okay, hold on.
Yeah,
so
you can actually explain.
Yeah, so if price breaks that high, that swing high, then we
Yes,
can see that there is a change of character and price is
yes,
now bullish.
yes. Until we
Got
see
it.
price taking this high, so that we may actually have, because this is our swing high, this is our swing, you can say this is our swing high right now, is it?
Right.
Yeah, so we have to wait for the market to take this, because if you are going to trade the reversals, we have to be very careful. Okay, we have to be very careful so that we may actually trade in the direction, so that we may not actually trade against the direction. Okay,
Yeah.
so it is very important to have a very good system. Like, for you to identify a change of character, you have to see a good break of structure in the opposite direction. So let us check it out and see. So you can see there. Okay, you see that. So we have this, this is what we call change of character right now. Okay.
Right.
So this is a change of character. Change of character. Okay. So this is change of character. And if you look here, we have this large imbalance. Okay. We have this large imbalance right here. Okay. Okay, see that that's a fair value gap. Okay.
And just another question here, so just I know.
Yes.
So we're considering this a change of character because the bullish candles are breaking the previous swing high with bodies, not wicks.
Yes, of course, yes, absolutely. So it has to be a very valid break of market structure, and you have to see the candles breaking with a very impassive move, leaving behind imbalances, as you can see here. So the market is feeling this imbalance. Okay, and you see after tapped into this imbalance, you see price is actually now trying to go to the upside. I missed this move because I was actually waiting for price to come back into this order block. Okay.
Okay, got it.
Waiting for price to come into this order block. Okay. So price didn't come into this order block, and after taking some time and actually looking on this structure, I actually saw like it was difficult for the market to come into this order block. Okay.
Right.
Because we actually saw this displacement to the upside, and you see we have an imbalance right here. At this level here, we don't have very nice impassive move. Okay, here.
Right.
We didn't get that big impassive move. We saw the big impassive move here. That's why we saw this very big candle here. That's why I think price just reacted from this and started to push to the upside. Okay. Right. So I expected price to take the previous day high. I saw we had the previous day high somewhere here. Okay, you see this. Okay, this one, previous day high, the green colored one, the green line, this one. Okay, here.
Got it. Okay, yeah, I see.
Yeah, so that's one. Okay, but if you want to trade safely, you just have to look on the short-term high. Like, you can use this one to avoid, because sometimes if you're going to hold a trade for, like it was on Friday here, so it was not safe actually take a trade with this point. If you take this as your take profit point, it is very far, is it? Very far. So you're going to hold a trade from here up to here. It is very risky, is it? So you just need to have a good risk to reward ratio. Just take your don't be greedy, don't be too much greedy. Okay, like you can use this. So we have several levels that you can use as take profit levels. Okay.
Right.
So it depends with, I don't like to tell my students to actually trade like big risk to reward ratio, like 1 to 10, 1 to 8. Just focus on 1 to 2, 1 to 3, 1 to 4, 1 to 5. But as much as you get experience, you can just start to increase your risk to reward ratios. Okay.
Right.
So here you can see price pushed from there. See? So price didn't tap into this order block, but just filled this imbalance and continue to go up. Okay. So you can
yeah.
see this, and also after this movement to the upside, so we can see this is what we call break of market structure now.
Yeah.
You see bodies breaking. This is break of market structure. Okay. Break of market structure, and you can see again price created this imbalance here. We created another imbalance.
Right.
This one. You see that?
Yep.
So price actually respected the fair value gaps and didn't respect the order blocks. And this was this was actually painful to me, because actually I saw good setups, but and on my premium group, I sent this setup. I told them to wait for the market to actually mitigate this order block here. We have this order block down here.
Yeah, sometimes it's I mean, like you said, right? It's like the good thing is that you have those rules that you're waiting for a price to mitigate your order block and things
Yes.
like that. Yeah, sometimes those things are just like they're not in our hands.
Yeah, sometimes you have to be patient. That's why it is very important to be patient. Sometimes we need to allow the market to actually just go the way it wants, because sometimes we cannot control the market. Okay, so you can see like here we have two areas and like two setups. The market respected only the fair value gaps. Okay, so you see here, and you see price took this previous we had this previous day high somewhere here. Okay, here,
Right.
and I marked this blue line. Okay, this was our previous day high, but right now previous day high is here on this point. Right. Okay, and you see after price took this previous day high here, we had this nice nice order block. Okay,
yeah, and then also if like just looking at the highs where you do the order block and where price went to, would you consider these equal highs?
Where let me check.
So where you drew the order block,
where
on the left side, top left side, you do the order block, right?
Yes, where I've labeled the order block here.
Yeah, yep. And then if you look at the high on the right hand side, would you consider these equal highs?
Okay.
The right side high, where the trade that you were gonna take. Yeah, this right here. Yep, this peak.
This.
No, the peak. Yeah, the high of this candle.
This one. This one. Okay.
Yeah. Would you consider these to be equal highs, or would you just say that the order block got mitigated?
Here, according to what happened here, let me just replay this one. We had this previous day high here, okay, which was our liquidity area. Okay, let me remove this so that we may actually see the previous day high line. Okay, so you see here an example of what we call liquidity area is the previous day high, and we have this previous day high here. Is it here?
Yeah.
So if you are going to execute your trade, you execute your trade after you saw price took this previous day high here. This one.
Okay.
You see? So why? Because this is liquidity gap, because price took the previous day high. So you can actually expect a reversal from here. Okay. So if you're going to take your trade, you can take your trade here, because you actually know like price already took this previous day high. But if you allow the market to play a little bit, you can see what happened here. This is not equal highs. Okay.
Okay.
The way the market mitigates the order blocks or the fair value gaps sometimes may create equal highs or equal lows. But what you have to consider is, have liquidity already been swept? Like, did you see any liquidity being swept before you saw mitigation to your order block? Okay.
Okay.
If you saw that, then you have to execute, because sometimes the market mitigates our order blocks with some structures which acts like liquidities. Okay, like you see the market mitigating your order block, but it creates an equal highs as it mitigates your order block. So if you're going to analyze, if you're going to trade that setup, you have to ask yourself, did you see any kind of liquidity being taken before that mitigation? So if you saw, then you can actually execute. Okay. Yeah, so that you may actually not miss a lot of setups. So This is
I have a
yes,
I have a setup that I wanted to share with you and get your
yes,
thoughts on it.
yes, yes.
Okay. So I just sent you this picture. So this is Euro AUD on the daily. So price is, of course, it's bullish. But right now
Is it
price
is
came,
it is it is it right now?
this is right now.
Is it happening right now? Okay.
Yeah.
So I think I should go there. Is it?
Yeah, sure. So
Yeah, I
if you
should
go to
just
Euro Aussie on the
hello?
yeah, hello.
Yeah, I yes, your voice was cut. So let me check it. Euro or $. Let me check it out. Euro. So it is daily time frame, is it?
For me?
Daily time frame.
Yeah, daily time frame. Yep.
Daily time. Check it out.
And let me just make sure something. There's Euro.
Euro.
So would it be okay if I can share my screen?
Okay, that should be
Just
more.
so that,
Okay.
yeah. One
Let me,
second.
let me try to actually give you the permission.
Yeah, sure. Okay, and okay,
I
let me
want
know
to
when you
cancel
can.
it. Okay, let me cancel it. Stop share. Yeah, I can
Can
see
you
it.
see my screen? Okay.
Yeah.
Okay, so I'm looking at Euro Aussie right now. Okay, so
Mm,
we're in a bullish move, and the next, I guess, drawn liquidity, I think. So we have this fair value gap on the daily, and then we
yes.
have the equal highs here. So I'm
Yes.
thinking, so I'm framing a day trade from the daily. So price right now is filled this fair value gap completely. So we'll just mark that. And
Yes.
then we go to, let's say, 4 hours. So 4 hours, okay, we have some order block here. But I'm thinking that maybe if we go down to like, here, let me set this. Okay. So I'm thinking that, so this right here, this cream color is the daily fair value gap. And I'm
Yes.
thinking that we have this green one, which is the 15-minute fair value gap.
Yes.
So what I think
Mm,
might happen, and again, I don't know, but you know how sometimes we have like session liquidity. So I'm thinking that the Asian kill zone
mm,
just finished, and we are going to enter the London kill zone in about 1 hour and 40 minutes. So I'm
yes.
thinking because the daily is bullish and we fill the recent fair value gap, I'm thinking maybe London
Mm,
sweeps the Asian low, and then maybe we can target this high or this fair value gap uh with the order block, or it goes, keeps on going until on the daily. I also marked the top fair value gap. So maybe it goes up until here into this level where we had
mm,
the daily fair value gap. So do you
yes.
think that this is a good way to frame the trade starting from the daily and then looking for intraday in the same directional bias? If Asian session liquidity gets taken out and we have a change of character,
Mm,
and let's say price mitigates an order block or fills a fair value gap, then we can take a
yes.
long. Do you think that?
Okay. Hello?
Yeah,
Yeah, sometimes your voice cuts. So according to how I was actually listening to you to know how you actually analyze the market. And I see
yeah.
you are actually using the fair value gaps as your resistance and support levels. Is it?
I see. So I wouldn't necessarily say like support and resistance in the traditional sense, but yeah,
Yeah,
when price comes
like
to a
yeah,
fair value
yeah,
gap, I
yeah,
do take a look at it. Yeah.
yeah. Like you are using the fair value gaps at areas where you can actually expect to see either a reverse. Is it like they can
Yeah. So
act like
yeah.
they act
So the
like
reason,
sometimes like order blocks, like areas where price will bounce. Is it?
yeah, exactly.
So
So the reason why I'm looking
mm,
like I feel a bit more I guess a bit more comfortable with going long if the Asia in London if Asian session if Asian liquidity gets taken out is because price here. So if we just start from here, right?
yes, yes. Hello, 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 hello.
Yeah, can you hear me?
Yeah, now I can hear you.
Okay.
Yeah.
So, I mean, again,
Mm,
this is like obviously I'm still learning, but I just wanted to get
yes.
your opinion that,
Mm,
if we have the Asian like liquidity being taken out and
mm,
London has a change of character, is this a
yes.
trade where you would go long intraday or no?
I would say I don't actually follow that kind of system when I'm actually analyzing, because if you use I have tried a lot of time for previous years, some years back and some months back there. I was actually following that system. Like I have to wait for the Asian session, like maybe Asian range high, Asian range low to be taken. Then I can expect a reversal on London. Okay. I actually
Okay.
started with that kind of mindset when I was actually learning smart money concept.
Okay.
But according to my experience I was actually back testing, the market was actually not moving following that kind of system. Okay. The important system is to understand the market structure before you understand the session behaviors. Okay. Because if you follow how this, like we always, a lot of traders, when we start learning, we actually think like the market, like I expected to see during the Asian session, if the market takes the Asian session high, I can actually expect to see a reversal to the downside. Is it? But it's not like that. Like if I look on the market here, this is daily time frame. So what I'm going to do, I'm not going to consider the issue of sessions, because this is daily time frame. Okay.
Right.
So a daily time frame, it covers all sessions. Okay. In one day, we have all session, is it? So
Right.
on daily time frame, what you have to consider is market structure only, the price action. Okay. So what you do, you check on the left if you have any kind of resistance, or any, when I say resistance, is just like order blocks or the fair value gaps. Okay.
Yeah.
So you check on the left if you have any order block. And if you don't have, you just look on the current price action. Like you can use the 3 consecutive candles, like from previous 3 days back
Okay.
up to the current day. Okay, so you just check those candles. And if you see you have currently, you have like here, currently you have the bearish candle, is it?
Yes.
And if you consider here, if you look careful, on the left here, we have this rusty, this is blue candle, I think. This one, if you highlight this you highlight it and take it to the right here, you see it is an order block, like price respected this order block. Try to mark this order block here.
You're talking about this one?
Yes, yes, that one. Mark that
Okay.
from the loads as your order block, and you will see price mitigated that order block.
Right. Right. Just touched it. Yeah.
Yeah, and if you go back on the left again, you see on the left again here, we had another bearish order block, and I think price respected again this bearish order block. Is
This
it?
one.
Yes.
This one.
Yeah. So if you look
Yes.
on this current price action, on these previous price actions, you see like the market is actually showing selling movements. Okay. Right. Currently here we see price respected this bearish order block, and we see we
Yeah.
have now produced this bearish candle. So
Right.
if you consider the fair value gaps here, it's going to be confusing to you to make decisions. Okay.
Right. Right.
That's why if
Yeah.
you want to actually have let me give you an advice on the fair value gaps. The best
Yeah.
way to use the fair value gaps is to use them as your continuation entries. Okay.
Okay. Okay.
Not
Yeah.
as your reversal entries. Like the reversal point of interest should be the order blocks. Okay.
Got it.
But the continuation point of interest would be this fair value gaps. Like if you're expecting to continue seeing a bullish structure, then you can actually enter your trade on a fair value gap. Okay.
Okay.
Like what you saw when I was actually explaining about gold. Okay. You remember when I was actually analyzing gold, is it?
Yeah.
I said like we saw the market took the previous day high and we saw price created a change of character and we saw price came down and mitigated that fair value gap. And you saw price, if you missed that first entry on the first fair value gaps, you saw and then you wait for that break of market structure and then you enter on the second fair value gap. Okay. So it means you are actually following the trend. So if you are actually trading following the trend, you can enter on what? On the fair value gaps. But if you are going to take a trade expecting a reversal movement, you have to enter on the order blocks. Okay.
Got it. Okay. I see what you're saying.
Yeah, you understood that, right? So if you're expecting a continuation of the trend, enter on the fair value gaps. But if you're expecting to see market changing from a bullish structure into a bearish structure, then you can enter on an order block. Okay.
Got it.
Yeah, it's going to simplify your analysis so that you may actually. And if you're analyzing from the higher time frame, just look on the order blocks most of the time. Okay.
Yeah.
Look on the order blocks because the fair value gaps on daily time frame are so many. Just look here, you can see so many, like the market is actually creating a lot of fair value gaps. So they are going to be confusing. Okay.
Right.
Yeah. So it's important to actually use the order blocks. And if you don't see any order block, use the use 3 candles. Okay. Like from the current candle, use 2 candles before that candle. Okay. So that you may actually see. If you see like the current candle is bearish, then you can actually look for sales. Like here, we have to look for sales. Why? Because the market actually respected this bearish order block, and also the market produced and created this bearish candle. Okay.
Yeah, that makes sense.
So go. Can you try to go to 4 hour? I think 4 hour. 4 hour time frame. I saw a very nice market structure on 4. I think it was 4 hour. Try to make so that we may actually see it clearly. Yeah. Okay. So you see here. Here we have this. You have this fair value gap here, and also here on the left you have the fair value gap, and also you have the order block here.
Right.
Okay. So if you look here, it shows a good area where you could see reaction. So now, if you're going to execute your trades on maybe 15 minutes or 5 minutes, you can go and check. Like now we expect a bearish movement. Okay. So you can actually highlight your fair value gap and now wait for the market to actually mitigate that fair value gap, and then you can actually sell from there. Because actually we now know we're expecting the market to go down. Okay.
Right. Okay.
Yeah.
That makes sense.
Yeah. So it's like that if you want to actually simplify your analysis and trade from.
Yeah. So like you're talking about the entry on the fair value gap. So like we have this move up, breaking the swing high with the body, and price respects this fair value gap. So we know that now we can take this until the order block on the daily, and then okay, that makes sense. Got it.
Yeah. So if you're expecting a continuation,
got it. Okay, that makes sense. I'll keep that in mind and I'll backtest that as well.
I think I should. I don't know if I should continue because I don't want to confuse you. You know. Should I continue? So you should take time to actually understand more about that. Because I think what I actually explained today was actually not, you have not been used to that.
Yeah, no, I think if you can also please send me the recording, that way I can watch it tomorrow before tomorrow's class and then take some notes on it, and then
I'll have to send it. So I want to I have this one. I have to explain to you this, and let me explain to you this. So you saw price didn't mitigate our order block like for 2 entry areas. Okay, but here after actually on daily time frame it was bullish. If you remember, I highlighted, I saw like price respected this bullish order block and we saw a good bullish candle. You remember when I was actually analyzing from daily time frame gold? Remember? So our goods, if you wanted to take trades, we need to take trade during which are bullish trades only, bullish entries. Okay, because the daily time frame was bullish. Okay, so here price was actually moving to the down after taking this previous day high. And if you're going to mark your order block, we have this order block here. Okay, we have this nice order block. This one. We have this nice order block here. Okay. So if you wait for price to come and mitigate this order block, then you can actually start looking for buys. Okay. So if you see price mitigating this, price mitigated this on Monday. Yeah. On Monday, we had a nice reaction here. No, it was on Friday. It was still on Friday here. Price mitigated this order block and then created this one, this structure here. Yeah. So you see this mitigation here, is it? So that this price touched this order block and then started to move to the upside. Okay.
Yeah.
Yeah. So I actually, when the market closed, it was somewhere, I think somewhere here at this area, I think. So I actually expected to see the market moving to the upside. Okay.
Right.
So this is what happened. So the market sometimes may not respect our bullish order blocks, but you need to be patient and wait for the right moment. Okay. So you see here, price mitigated this order block, and you can see we had a nice bullish run to the upside. Okay.
Yeah.
So you can see that was a reaction on the bullish order block. So patience is very important when we are actually looking for setups.
Yeah, no, definitely.
Yeah, so that's why sometimes traders change strategies from day, like they change strategy most of the time. Like if you look on this area here, we saw price respected the fair value gaps and we missed the 2 trades. So someone may actually decide to change a strategy from here. So now I'll be actually executing on fair value gaps, you see?
Right.
So that's not good. Or if you want to be a successful trader, you need to stick on your strategy and make sure you're actually patient, because sometimes the market may not respect your order blocks, may actually respect fair value gaps. But also for those people who execute on fair value gaps, they lose sometimes a lot of money because price is actually not respecting fair value gaps. Instead, price moves until where there is an order block. So you find people who trade on fair value gaps, sometimes they actually lose money because the market is going to take their stop loss and it's going to mitigate the order block. Okay.
Right.
Yeah, so it's important to stick to your strategy, because if you trade order blocks, it's safe. Also, if you trade fair value gaps, it's more complicated. Fair value gaps are more complicated. It's different from the order blocks. Like if you look on this area here where we had this order block, you see we had this fair value gap here. Okay. This one.
Yeah.
You have this one. You see that fair value gap, you see?
Right.
So this fair value gap, if someone executes trade on this fair value gap, sometimes if someone executes trade on fair value gap, sometimes may lose money here, because you see price went and actually expected an order block here. Okay.
Yep.
So this may actually, some traders may lose money here because they actually trade on fair value gaps. Okay. So it is safe to follow your strategy. Okay.
Yeah.
But also you can see sometimes the market, you can see here the market, like what happened here, the market again respected a fair value gap.
No.
That's why it is important to backtest. Okay. You see a continuation here. I'm talking about this one. I'm talking about this. You see this continuation here. Okay. You see that? Like price created this fair value gap, price entered into this fair value gap and then continued to go to the upside. So it was a continuation. But also you see, if we actually highlight our order block here, waiting for the market to come into this order block, you see what happened. Price actually went below our order block a little bit and then continued to go to the upside. Okay.
Got it. Yep.
Yeah. So sometimes you may see this kind of liquidity sweep. This was like a liquidity sweep, because somewhere here we have like an equal high. Okay. But it's not going to be easy for you to identify every kind of liquidity. Sometimes you may lose a lot of money. You may actually miss some trades because you're actually considering liquidities all the time. Okay, so here, if you execute your trade there, the only thing that could have saved you here is where you have pressed your stop loss. Okay.
Right.
So if you wanted to have a safe stop loss, and you know this was the fair value gap earlier, you see, you can actually put your, like if you enter here, if it is, because this was this is a bearish candle. So you could have waited for the market to actually start to print these bullish candles. Okay.
Yeah.
Because you know this area we have a fair value gap. So you know if the market is going to actually push to the upside here, it may actually try to fill this imbalance here a little bit, because here it did not fill nicely this fair value gaps. Because if you want to see a nice fill of your order block, you have to see the market filling maybe 50% of that fair value gap. Okay,
Right.
that's the nice imbalance fill. Okay, so if you see like here what happened, the market went, I think it was also below 50%. So if you wait for the market to start printing this bullish candle, you can actually take your trade from there, somewhere there, and then you can put your stop loss there. Okay.
Yeah, definitely.
Yeah, so that you may actually trade more safely. Okay. So as you keep on backtesting, sometimes you are going to develop your own style of actually entering a trade, because even if I tell you like enter in this way, the way you actually see opportunities in the market is going to be different from the way I see opportunities in the market. Okay.
Yeah, absolutely.
Yeah. So I think this. Yeah. Yes.
Yeah. If you can send me the video, I think
Yeah.
that'll be like awesome, and then I'll watch it. You can send it. You can upload it to like maybe, I don't know, Google Doc, and then share the link with me, or however you want, and then I'll watch this. I'll backtest it. Try to understand like how you're approaching the market, and then go from there.
Yeah, I think I just you have Telegram. It's simple for me if I send it on Telegram, just direct it to you.
Yeah, just send let me know your Telegram. Your Telegram.
Yeah, you use the same the same number on Telegram. Oh?
Yeah.
Yeah, so I will send it just like that. Okay.
Okay. Okay,
Yes.
boss. I'll wait for the video, and
Yeah, I'll send it. Yeah,
yeah,
I'll
thank
send
you.
it immediately.
Yeah, sure. I'll watch it tomorrow, and then before tomorrow's class, I'll take some notes on it, make sure that everything makes sense, and then we can do this again, because I really like the analyzing part of this with you.
Okay, thank you. So if
All
you
right.
find any question when you're actually watching this video, you can actually also prepare your question, then we can actually try to go back and check anywhere that you found any challenge, any problem. Okay.
Definitely. Sounds good, boss. Thank you so much. Have a good day.
Okay, you too.